What is going on, everybody? My name is Asif here with AK Real Estate, and today we're going to be going into what you should look for when purchasing an investment property. Before we get into the video, if you're looking to see other videos such as this one you're watching right now or anything real estate related, go ahead and subscribe to the channel and follow our Instagram page for more. They say one of the fastest ways to build true wealth is through purchasing real estate. You can talk about the benefits through asset appreciation, tax advantages, investment diversification, and what everyone likes to talk about, passive income. Becoming a homeowner is a significant feat. Not owning rental property, that is a whole nother level. Whether you're a seasoned investor or a first-time homeowner, today we're going to be recapping some of the things you should be looking for when purchasing an investment property. When purchasing any property, the first thing that you'll hear is location, location, location. And this reigns true for investments as well. In this case, location factors are going to differ from your personal search to your business search, and here's how. By looking for areas that have high rental demand, areas that have proximity to jobs, transportation such as major highways and airports, proximity to colleges and university can all lead to high rental demand in the area. Appreciation potential may be another reason why location is a significant factor. According to Narada Real Estate, cities such as Nashville, Tennessee, and Miami, Florida led the way in the country in 2024 with upwards of 8% appreciation rates. Smaller factors such as school, crime, and future developments might place another importance on why location is important. One of the biggest mistakes people can make when choosing the investment property is making it about themselves. And I don't mean that in a mean way. I mean that in a way some people might not be in a busy city, or some people might prefer to be away from major population, or some people prefer to have a large deck in the front or a 2-car garage, or whatever the case may be. You need to make the choice that is going to be best for the numbers and your portfolio for your investment, not your personal feelings. For me, one of the most significant factors when looking into investment is going to be my cash flow. Most investors would only purchase property as if they positively cash flow, while some others may take it to another level and say, I'm only purchasing a property if it's got cash flow of 5%, 8%, or even 10% in certain markets. Cash flow and what we call cash on cash return is one of the main metrics investors will use when comparing deals. Cash flow is based off the net positive per month, which is going to include your income and your expenses. Generally, in most cases, you're going to take your income, which is from your rental, and minus it by your expenses. This could include your mortgage payment, insurance, HOA fees, property management, utilities, landscaping, and much more. While calculating cash flow can seem relatively easy, there may be many small factors that you as an investor may be overlooking. Factors that I would never neglect and some may leave unnoticed includes occupancy rate or vacancy rate, reserves for repairs, or tenant turnover expenses. Vacancy rate is based on the percentage of the year that your property may be tenanted for. This may vary if you're in the long-term versus short-term rental game, as it may not be all months in the year or all weeks in the year that your property is tenanted for and receiving income for. Whether you have the tenant moving out, unable to pay rent, or even finding a new tenant, this may all be weeks or if not months where your property will not have any income that can affect your overall cash flow. Vacancy rates will depend on your local area and the market at the time, so please do your due diligence when underwriting your property. Reserves for repair are a crucial aspect of an expense that can be overlooked. Being in a position where something major is required to fix and not having adequate funding for it can put you in a tough position as a homeowner, or even small things that could arise that require immediate repair. Calculating a small percentage into a reserve balance can be extremely helpful for now or even down the road. And then we're talking about tenant turnover expenses. Whether your current tenant moves out, costs such as cleaning, marketing fees, and repairs can be small adjustments that can overall affect the cash flow for that month. The final step we'll be covering when looking into investment property sounds simple enough, and it's going to be having a plan. What is your intended use of the property can be one of the best questions you can ask yourself to lay out a plan of how your property search is going to go for and what you're looking for. Will this be a long-term rental? Would I Airbnb this unit? Would I ever want to stay in this unit? What is my exit strategy? Or even what is my goal out of this investment? Whether you'd like to sell it in a few years once you build some cash flow, you want to Airbnb it to people visiting the city, or you'd like to stay in it for the winter months. Any of these questions that you can ask yourself is going to help you build a plan to know exactly what you want to look for your investment. A famous quote goes by saying, if you fail to plan, you're planning to fail. And this is going to reign true for investments as well. Those are going to be some of the points that we're going to be talking about on what to look for in your investment property. If you guys enjoyed this video and looking for videos similar, please hit that subscribe button for weekly videos. And go ahead and check out the Instagram page for content just like this one. And it's been Asif with AK Real Estate. Thank you very much for watching the video. See y'all in the next.